Hey everyone, so I wanted to do a video that's going to be here on my YouTube channel for a very, very long time because it talks about what everybody fell into when money was cheap and the drunkenness that we've seen in the city of Windsor. There's two videos. This is about rental units. So there were all kinds of people up in Toronto that came to Windsor and said, oh my gosh, houses are so cheap down here. I can rent them so well. They'll be cash flow positive and I'll make all kinds of money. I want to buy a house. So they all came in and drove our market wild in 2021. And realtors benefited from that. We made really, really good money selling houses. Some did. I had a very hard time with that because I would always ask my client, what kind of house do you want to buy? What kind of business do you want to go into? Do you want to go into the student rental business? Do you want to go into the single family business? Do you want to go into the, mom and dad business? What kind of business do you want to run? And everybody would look at me like I was from Mars. They would say, I just want to borrow the bank's money for nothing and make all kinds of money. I'm like, you're not going to make all kinds of money. You're going to have all kinds of risk. And nobody factored in the risk. Because interest rates, oh my gosh, interest rates are so low. They're going to stay so low. They're going to just, how do we know that? The economy is gangbusters in 2021, coming off of COVID. Everything was being onshored. Everybody's going back to work. And money was just all over the place. So in 2021, a 2+ bedroom, 1-bath house was roughly $400,000. Right? So somebody would come in and put 10% down, $40,000 of their own cash. And they take the financing at, let's say, 2.5%. 5-year term, 2.5%. Oh my gosh, I'm going to make all kinds of money. So they financed $360. And their property taxes were $300 a month. Their payment was $1,612 at 2.5% on $360. The payment was $1,612. Plus $300 for property taxes, $1,912. Everybody always forgot about this. They didn't pay any attention. Who cares? Property taxes, you got to pay taxes anyway. Who cares? So $1,912. And they rented the property for $2,000 a month. And they're like, this is great because I'm going to have all of this upside of the value of this house. It's going to go up 10, 12, 15% per year. And I'm going to have cash flow positivity of $88 a month. Okay, that's good. That's fine. Not a problem. If that's what you think is going to happen, that's okay. I can't tell you anything different. I can't tell you that it's not going to go up 13% per. I don't know. Yeah, it's going up 13% per year right now. But I don't know what 2023 is going to bring. I don't know what 2022 is going to bring. I don't know what 2024 is going to bring. I don't know what the economy is going to be like in any of these years. I just know that, yeah, the government's bringing in a heck of a lot of people, and yeah, there's going to be massive demand for houses. I just don't know. I don't know what the local economies are going to be. I don't know what the cost of borrowing is going to be. I don't know any of that for the future. But okay, if you want to go and try to play this game this late in the cycle, that's the key. This late in the cycle, if you want to try to play this game, okay. And so everybody was piling in 2021, but the smart money was made in the city of Windsor in 2016. They were coming in buying for $100,000. That's an exaggeration. They were buying for about $250. And they got all the gain from 2016 to 2021. They were the ones selling these houses to the new buyers coming in out of Toronto saying, oh my God, I want to go into the rental house business. Okay, great. No problem. So these folks made all the money. These folks lost all the money, and here's how they lost it. So the market has stagnated. We're not seeing the same 12% growth per year. We're seeing back to normal 3% growth per year. 3 to 4%, maybe 5, depending upon the neighborhood, depending upon the house, depends upon a lot of different factors. Everybody was being broad and generalist when they were looking at these numbers. Okay? So now the problem is that person that bought a rental property owns a rental property in Windsor that's worth about $412,000. If they decide to sell it, they're going to have about $20,000 of cost. So they're going to end up netting about $391,000. Okay, so they're going to lose some of their $40,000 down because they only owe, in this case, they owe about $350,000 on it, roughly, because they paid it down some. Okay? So yeah, they're going to have $41,000 if they're lucky, and they put 40 in. So they're going to have $1,000 a gain. Woohoo! Isn't investing in real estate awesome? $1,000 gain. But their payment of $1,612 now is going up to $1,992 at 4.5, and that's assuming a really, really great interest rate. Interest rates just aren't that. They're higher than that. But I'm just keeping it simple. This was 2.5, and I'm just saying a 2-point change in interest rate. So their payment now is $2,292 because they've got $1,992 plus $300 of property taxes, which has gone up. It's about $310 now probably, but I haven't factored any of that in. $1,992, $2,292 cost. They've got it rented because they were able to get a little bit of a rent increase of $50. So they got $2,050 a month coming in. Woohoo! But they've got $2,292 of cost just on a 2% spread in interest rates because they took a variable rate too. They didn't listen to me. They didn't take a fixed rate. They took a variable rate. Oh, but Brian, the variable rate is so darn low. I want the cheapest possible thing, so I'm taking the cheapest possible thing. And they were factoring in all this massive, they weren't factoring in all the massive risk of that rate. So now they are losing $242 a month. It's coming out of their pocket, $242 a month to keep the house. Sure, they could sell the house, make $1,000, but they got a tenant in there too, and tenanted houses don't show very well at all. They're very hard to sell because the tenant is playing the game. They know what they've got. So then, assuming you have a $242 gain or $242 a month loss in your house, you have hope that the market turns around, that interest rates go down. That's why our ministers put all the pressure on the Central Bank of Canada. It's because all the property owners, there's a lot of very rich property owners that vote. And all the rich property owners went to all their ministers and said, look, put some pressure on because we can't keep going. We're going to end up negative. My Yellowstone ranch, I'm going to lose if interest rates continue to keep going up because there's only so much money I can make off of a cow. And I can't sustain my land with too many cows on it. So there's only so much money available. And I don't know how to do anything else. I ranch. It's what I do. So the ministers then put the pressure on the government of Canada to say, look, you got to stop here. Otherwise, you're going to crush too much. You're going to do too much damage to the economy. And they listened and they said, no, we're going to pause for right now and see what happens. But inflation is soaring again. Oil is going to $100 a barrel. Groceries are going up every single day. The real cost of inflation, not the fake cost of inflation, because they don't factor in any of that stuff any longer into the inflation factors. Because if they did, inflation would be running at 11, 12, 13%, and interest rates would have to be 11, 12, 13%. So they took all that out, which is why our interest rates are actually very, very low at just 7%. So at the end of the day, that person that bought that house, they're all underwater. Every last one of them. So that's why in the city of Windsor, you see this $400,000 house that should only sell for $412,000. They've got it listed and they won't sell it because they want $450,000 for it. That's why seller's expectation, again, I don't know who's selling the house. I don't know if there's, we can see if there's a tenant in there, then we know. But if it's vacant, that might be just a landowner that's saying, hey, I got to get out of my property and I want to get out of there at $450,000. Well, maybe that house isn't worth $450,000. Maybe the market value on that house is, in this case, $412,000. Because it was a rental unit. Rental units don't look good. So somebody else loves them and fixes them back up. So at the end of the day, they want $450,000. It's not worth $450,000. Who would offer $450,000? The offer is going to be $412,000. There's no magic in this thing. And so then 450, 412. Then the seller's going to have to say, gee, do I want to lose money and get out? And the answer should be absolutely yes. Lose as little money as you possibly can and get the heck out. Because you should have never been landowners in the first place. You should have never been tenants in the first place. Just because the bank's money was so darn cheap, why would you have bought a house that you weren't going to live in yourself? Why would you have gone into the rental house business? Because it crushed you like a bug. You got to know the business that you go in. I know all of the ins and outs about all of my business units. I wouldn't go into them if there were going to be losses. Now, there's a difference between building the infrastructure in the business, investing in that, taking a little bit of debt, like I did with the car business. It was like, oh, there's all these cars available cheap. I'll go ahead and buy them, build up some inventory, and take a little bit of debt, as long as it's logical debt. And now I've got $30,000 of inventory and no debt. It was just logical. That business is profitable every single month. I'm not buying very much in there anymore either because I really don't need to. I can look for the special deals that I know I can make 100% on. And if I can't pull the trigger at 100%, I just don't buy it. Because it costs money to run this business too, that business too. Makes about $2,000 a month, that business. Every business has to be profitable. So wouldn't you have been better off buying Hot Wheels cars instead of a house? The answer is yeah. Wouldn't you be better trading your $40,000 in the stock market? The answer is yeah. You're going to make 20% per month. It's $8,000 a month profit. So yeah, it never made any sense to me in my ADHD brain why anybody would want to go in the housing business. Now, I do have a client that did buy a house for I think it was $260,000, right by the bridge. And he said, they're going to be building this bridge. There's going to be all these rich people building bridges for the next 8, 9, 10 years. It's going to take a long time to build this bridge, and the government never can build a bridge that fast anyway, unless it's Quebec. So I know that if I have a nice house close to the bridge, then I might have some bridge people. And then they're going to be building a battery plant, so I might have some battery plant people who will pay more because they're professionals than a student into my house. But I also know that there's rich students too. There's not just poor students. Everybody thinks students are poor. In this city, they are some of the richest people in the city. They're driving around BMWs because their families could afford to send them to international schools. It's not cheap. So at the end of the day, he bought a $260,000 house and rented the rooms. He's got the basement rented and 3 bedrooms on the main. And he's reinvested back in the property. He's got a garage as well too. He's reinvested back in the property, kept it really, really nice. Now that property is worth $400,000 because he bought it 6 years ago. And the cash flow there is really, really strong. It wasn't until he bought his second house, kind of at the pinnacle of the market, he paid $450 for it. And he's only got it rented for $1,900. So he's losing money, and he took a variable rate on this one, and he took a variable rate on this one because he wasn't listening. And so now his interest rates, he's losing money on this one, and he's not making as much money on this one. And then together there is just a small sum of profit. So he can write it out because he does have a profit. He's a young guy as well too. He's working really, really hard, making really, really good coin, lives at home, doesn't have a whole lot of expenses. So he can continue to keep riding this train. And he'll ride it out. Hopefully. Don't know what the economy is going to be in 2025. Don't know. Hopefully. So, yeah, he's doing okay because he's got this one as his core. And then he messed up on this one because he wanted to buy in the top of the market. And now we're out looking for a third one because he's got money. He also did a flip with me. and he made about $260,000 on a flip. $200,000 on a flip at the pinnacle of the market. And he got really lucky to do that. So he does have this $200,000 sitting in his pocket, and he wants to go out and buy the next house, but he got clipped here, and so he realizes, wait a second, it has to be the right house, Brian, and I have to be a lot stricter on what I want to buy. So we're looking, waiting for the market to correct a little bit. Probably will never correct, because there's still there's now, as of starting this video, there were 40 million people in Canada, and now there's 40,512,000. Oh, there's now 40,513,000. Oh, 514. Up 515. There's more and more people coming into Canada, which is driving our housing prices through the roof because we don't have any houses here. And everybody that's coming in is bringing in good coin with them, and they want to buy a house. That's why they're coming to Canada. I want the opportunity of home ownership in Canada. I want to build equity for my family. And there is nothing wrong with having $750,000 paid off house. It's kind of a nice place to be, trust me. It's a heck of a lot of work. So, at the end of the day, how renters screwed it up, because money was free, and everybody was just drinking the Kool-Aid with the kind of, oh, the bank's money's free, bank's money's free, money's free, bro, money's free, got to go buy a house. Okay? Bank's money is no longer free. And they're losing money hand over foot. And they have rental houses that don't show well. So could the money have been used, this $40,000 used in some other way? Absolutely yes. Would that $40,000 have been better off used to make them smarter, possibly? Take more education, get another designation, open up a business unit, do something, buy a lawnmower even. They'd be far better ahead if they would have bought a lawnmower and started cutting grass than going and using the bank's free money. But everybody was drinking the Kool-Aid. And now everybody's throwing up because the Kool-Aid was tainted with risk. R. Nobody factors in R in any equation. We're doing more R work now. Have a great day. Real world story about rental units. Buying one doesn't make any sense. If it's a multi, makes a little bit more sense. But a multi, it's $540,000 in the city of Windsor. A good multi. But then you have two families paying you $1,800 each. You've got $3,600 coming in. You're distributing your risk R. It still makes the most sense to have at least one from a financial perspective as a financial advisor. If you wanted to own a rental unit, it does make a hell of a lot of sense to have one duplex in your portfolio. The reason for that is if you run into hard times and you screw something up, you can always come in and borrow against the equity in your duplex, and your own personal family home is not at risk. Always makes a lot of sense to have a duplex. Never makes any sense, in my view, to have a single family house. Just too much risk. The R here is just massive. That's what everybody found today. Thanks for watching. Have a great day. If you have any questions about investment properties as well too, I have a degree in finance. I keep it very, very simple. You can see the math is the math. There's no lying about it. So if you'd like to talk to me a little bit about and pick my brain a little bit about with my degree in finance, this ADHD brain of mine, if you'd like to pick my brain about finance and real estate, don't hesitate to give me a call, 519-995-6145, 519-995-6145. Have a great day. Bye-bye.